Unlock your dream home with Purchase Plus improvements. Hi, it's RASHA INGRATTA'S, a licensed mortgage agent with Mortgage Intelligence here in Windsor, Ontario. Today, we will be speaking about Purchase Plus improvements in this slide presentation. What we will cover: what is Purchase Plus improvements, breaking down key program details, funding your renovations, lender bank verification requirements, Purchase Plus improvement real-life examples, and why choose Purchase Plus improvements. What is Purchase Plus improvements? Imagine you've stumbled upon your dream home in the ideal neighborhood, but it requires some interior upgrades. You've already got your down payment ready, but you're wondering how to finance those essential renovations. This program offers you the chance to include renovation costs in your mortgage. Key program details: property price. Your chosen property must be under $1 million. You can finance up to 10% of the purchase price, up to a maximum of $40,000 for renovations. Some lenders and insurers have made exceptions to go over that. Renovation timeline. Renovations are typically expected to be completed within 4 to 5 months after closing. Scope of the repairs. The program is primarily designed for cosmetic repairs rather than major structural work. For example, adding an extension to the home, adding a garage, adding a second story, things like that. Funding your renovations. It is not as simple as just requesting a larger mortgage amount. You'll need to find the right property, gather renovation quotes, and cover renovation costs upfront or through deposits. It is essential to keep receipts handy, as your lender may want to verify the expenses once the work is finished. That is if you have not hired a contractor that is going to do all the work. Lender or bank verification requirements. Lenders have varying methods for verification, with some requiring appraisals while others will accept photos and receipts from the homeowner. Once they are satisfied that the renovations meet their standards, they'll release the renovation funds to either you or the contractor that finished the work. Keep in mind that your down payment is calculated based on the improved value of the property, not its original purchase price. Lenders, banks usually will give you, again, 60 to 120, sometimes up to 150 days, 5 months to complete the renovations after closing. Here's an example of a Purchase Plus improvement scenario. Jennifer discovers her dream home listed at $400,000. However, she envisions updating the master bedroom and giving the place a fresh coat of paint, which amounts to $20,000 in renovations. By leveraging the Purchase Plus improvement program, her down payment is calculated based on the improved value of $420,000. So she puts an offer on the home. Let's say it gets accepted at $400,000. She gets quotes from a contractor, approximately $20,000 in improvements, and we submit that to the lender, the purchase agreement, along with the contractor quotes, and we get an approval for a $420,000 purchase versus a $400,000 purchase. And the down payment is calculated on the $420,000, not the $400,000. Jennifer proceeds with the renovations after closing, and the lender disperses the $20,000 renovation cost to her contractors once the renovations have been completed. So the $20,000 sits in a trust account at the lawyer's office for as long as it takes until the renovations are completed. Then they will release the funds. This is why the lenders don't like to wait more than 3 to 4 months to release the funds, because you are technically paying interest on that $20,000 that is sitting at the lawyer's office to complete the renovations. So her monthly payment on the non-renovated home would have been 5% down on the $400,000. That is $2,750 a month monthly payment. And the monthly payment on the renovated home with the 5% down is $2,995. So that is a difference of approximately $245 or $250 a month on a $20,000 upgrade in renovations. Here is an example of somebody purchasing this home with the living room looking the way it is before, and then after, with the beautiful windows, the walls, the hardwood, the fixtures, new doors. Let's just say this whole renovation cost $30,000. They purchased this home, let's say, for $500,000. On closing, the mortgage payments will start on the $530,000. The $30,000 sits in the lawyer's trust account. Once the renovations have been completed, the $30,000 gets released to the contractor, or if you prove receipts of all the renovations that you've completed here, it would have to add up to $30,000. We have had situations where the receipts did not add up to $30,000, then the lender will adjust the mortgage amount to reflect what was spent on the renovations versus what was provided in receipts. Another example with the kitchen here. Another example here with before and after for bathrooms. So again, these are not structural renovations. These are cosmetic. So you are changing you're upgrading, you're renovating, you're updating your bathroom, your kitchen, your living room. You're not structurally changing the home, adding rooms or second stories and such. Why choose Purchase Plus Improvements? In a real estate landscape where home values can fluctuate due to interest rates, this program provides an incredible opportunity. You can transform a well-priced house into your dream home while ensuring that the financing aligns with your vision. Sometimes homes that need work tend to not get that much attraction, giving you, the buyer, flexibility in terms of no other offers on the table, or maybe a few. How to get started. If you have any questions about Purchase Plus Improvements program or need guidance on how to get started, please don't hesitate to reach out to my team at 519-250-4848. My name is RASHA Ingratta. My email address is rasha@shopmortgages.ca, and request an application for a mortgage pre-approval or request a phone call for a discussion. Thank you for listening and have a wonderful day.